You're 34 years old and you've never fired a gun. That's not a deficiency. In the Chicago field office of the Internal Revenue Service in 1930, it's the only qualification that matters for the work they're about to hand you. Every federal agent in this city wants to put Al Capone in handcuffs. You're the only one who can actually do it. And that means you're the only one he actually needs to stop. You're not the man with the badge and the authority and the press photographs. You're the man with the green eye shade and the adding machine and the 4-year accounting degree from a state university nobody outside the Midwest has heard of. You've been doing this for 9 years, examining books, tracing income, finding the number that doesn't reconcile with the other numbers, and following that discrepancy backward until it arrives somewhere nobody intended. You've audited corner stores and manufacturing concerns and a grain cooperative that turned out to be laundering money for a state senator. You've never worked anything like this. Nobody has. The thing about following numbers is that eventually the numbers lead somewhere the person who made them didn't expect. And then the ledger page sitting in your briefcase becomes the most dangerous piece of paper in the state of Illinois. You won't understand that for 3 more months. Right now, it's just a ledger page with a gap in it, and the gap is what's going to make the case. And you don't yet know the gap is also going to tell you something about the building you're working in that you'd rather not know. The investigation had been running in pieces for 2 years before they handed it to you. The approach was Elmer Irie's design, the enforcement branch chief who'd looked at Capone's operation and decided the entry point wasn't the gambling or the bootlegging or the violence, but the money those things produced. The theory was simple in outline. Capone was spending at a scale that required income at a scale, and income at that scale left traces, and traces were what accountants were built to find. The complication was that cash businesses, gambling houses, speakeasies, the whole infrastructure of an illegal empire operating in physical currency, didn't produce records in the normal sense. No invoices, no receivables aging, no payroll ledgers, just cash in and cash out and a man who never signed his name to anything. The previous examiners had been building from the expenditure side, what Capone spent, the Palm Island estate, the hotel suites, the tailoring bills, working backward from conspicuous consumption to inferred income. It was solid in principle and slow in practice, and the defense attorneys knew every counter-argument available. You'd read all of it in the transfer files over 2 weeks in January. You'd made notes in the margins. You'd started seeing something the previous approach had missed. The rules came from Irie directly, delivered in a 15-minute meeting that Irie conducted while simultaneously reviewing 3 other files. Rule 1. You touch nothing that hasn't been authorized. The chain of custody on every document is the foundation on which the prosecution rests. One unauthorized access and the defense buries you in it. Rule 2. You talk to no one outside this office about the specifics of what you're examining. Not your wife, not your colleagues in the civil division, not the FBI men who keep asking whether you've found something they can use. You give them nothing. The investigation has its own compartment and you stay inside it. Rule 3. You document everything, not just your findings, your process. Every document you review, every source you contact, every calculation you run, logged, dated, initialed. The case lives or dies on the completeness of the record. Rule 4. You trust the chain directly above you. Irie runs the investigation. You report to Irie. What goes above Irie is above your clearance level and above your concern. You do the accounting. You let the chain do the rest. Rule 4 was the one that broke. The ledger was in a warehouse on South Wabash, one of 6 boxes of business records seized from a Capone-adjacent gambling operation called The Ship. It had been sitting in evidence storage for 14 months when you got access to it in March of 1930. The box smelled like cigarette smoke and damp paper. You wore cotton gloves, which was standard procedure. You photographed each page before touching it, which was your own addition to the protocol. Something about the material quality of evidence that you'd learned to be careful with in 9 years of handling other people's books. The photographs cost the government 11 cents per frame. Irie signed off on it without comment. The ledger itself was a standard commercial cash book, the kind sold in any stationery supply in the city. Green cloth cover, alphabetical tabs at the edge for the letter index. Inside, columns for date, description, amount in, amount out, balance. The handwriting was consistent across the first 40 pages. Careful, legible, the writing of a man who understood these records would need to be read by someone. A professional bookkeeper, not a criminal. That was your first note. On page 41, the handwriting changed, not dramatically, not the kind of change a layman would notice, but you'd been reading ledgers for 9 years, and handwriting under stress has specific characteristics: the pressure variation, the letter spacing, the way a person's baseline tilts when they're writing something they're not comfortable writing. The new hand on page 41 was tighter, more controlled, in the way that control is different from ease. The entries on page 41 covered a 3-week period in October of 1928. The amounts were larger than the surrounding pages. The descriptions were vague in a way that was specific, not the normal shorthand of a busy bookkeeper, but the deliberate vagueness of someone making a record they needed to be able to deny. And in the middle of the third week, there was a gap. 4 days, no entries, in a book where every other day had at least 2 entries, including Sundays. The gap wasn't an accident. You knew this the way you knew most things in this work, not from a single observation, but from the surrounding context, the texture of the material before and after, the behavioral signature of someone who needed 4 days to not exist on paper. You made a copy of page 41 before you logged it into evidence. Standard procedure: working copy for your analysis file, original stayed in evidence. You put the copy in your briefcase. You initialed the chain of custody form for the original. You took your briefcase home that night. That's the only document you take home. You won't notice this for another 3 months. When you do notice it, you won't examine why. You'll already know why. The gap meant income, not a small amount. The surrounding ledger entries, when you traced their arithmetic forward and backward, implied a source of revenue that the 4 missing days were accounting for, or rather, were specifically not accounting for. You worked this out over 2 weeks using the reconciliation method: what the books said going into the gap, what they said coming out of it, and what the difference implied about what had moved through the operation in the interim. The number was substantial enough to matter legally, substantial enough that its deliberate omission from the records constituted evidence of intent. Intent was the element that turned tax evasion from a civil matter into a criminal one. Intent was what you'd been looking for. You wrote a 4-page memo. You summarized the methodology, the finding, and the legal significance. You cited the specific pages. You attached the working calculations. You put it in a restricted routing envelope and addressed it to IRE. That memo went up the chain on a Thursday afternoon in April. That's the moment the clock starts. You don't know it yet. You're walking back to your desk from the evidence room, thinking about the next box of materials, running the arithmetic in your head the way you run it constantly, the background hum of a mind built for reconciliation. You're thinking about what the gap means for the case. You're not yet thinking about who else in this building just read the memo you wrote. The informant contact came 8 weeks later, not dramatic, not a meeting in a back room or a phone call with a disguised voice. It was a source document that arrived through normal evidence channels, a seized business record from a different Capone-adjacent operation, forwarded from the FBI's Chicago office as potentially relevant to your examination. Standard interagency cooperation. You received it, logged it, began reviewing it. Inside the document was a handwritten notation in the margin, 4 words, in pencil, so faint you almost missed it. He knows the gap. You sat with those 4 words for a long time. The office around you continued its normal operation: typewriters, phone conversations, someone down the hall arguing about a filing discrepancy. You looked at the notation. You looked at which office had forwarded the document. You thought about the restricted routing envelope and the specific list of people authorized to receive documents marked at that level. You don't feel the thing you expect to feel. You expect alarm. What you feel instead is something quieter and more specific: the feeling of a calculation completing that you didn't know you'd started. The case you're building is real. The gap is real. The income it implies is real and provable, and the memo you wrote lays out exactly how to prove it. None of that has changed. What has changed is that you now know the memo didn't stay in the restricted routing. It went somewhere else, to someone who forwarded it in a document that came back to you through a channel you weren't watching. The building has a hole in it, and you can't prove the case without deciding what to do about the hole. The restricted routing list had 7 names on it: IRE, 3 senior examiners, 2 supervisory agents from the Special Intelligence Unit, and a liaison officer whose function was interagency coordination, the man responsible for managing information flow between your investigation and the FBI's parallel efforts. 7 names, one hole. You didn't start with suspicion, you started with arithmetic, the way you always started with difficult material. You went back to the timeline and you mapped the restricted memos against the sequence of events in the case. Not just your memo, but the previous examiner's memos, the access logs for the evidence storage, the scheduling records for witness interviews. You were looking for the pattern that a gap in a ledger produces, the silence that doesn't match the surrounding noise. You found it over 3 weeks of work done mostly between 7 and 9 in the morning, before the office filled, in the specific quality of early quiet that lets you think without interference. The pattern was in the timing. Certain investigative moves had been anticipated. Witnesses who should have been accessible had been moved. Evidence that should have been in storage had been sanitized at the margins, carefully, in ways that required knowing in advance what you were looking for. The pattern pointed at the timeline pointed at the memo routing. The memo routing gave you 7 names. The Saturday morning your wife was making eggs and the radio was playing something you couldn't name afterward. You wrote those 7 names on a piece of paper at the kitchen table. You looked at the timeline against each one. You crossed out Irie. His access predated several of the anticipations. You crossed out the 3 senior examiners on the same grounds. You crossed out one of the 2 SIU agents because his access window was too narrow for one of the early incidents. You were left with 2 names, the second SIU agent and the liaison officer. You looked at both names for a while. The eggs were almost ready. The radio played something with a piano in it, the tinny sound of a morning broadcast coming through a small speaker in a kitchen in a house on the northwest side of Chicago where nobody was watching you and nobody knew what you were looking at. You crossed out the second SIU agent, not because you were certain he was clean, because the liaison officer's function, interagency coordination, the managed movement of information between your investigation and external parties, was the specific role that made the specific kind of leakage you'd identified structurally possible. The SIU agent could have done it. The liaison officer didn't need to improvise. He just needed to do his job badly in a directed way, with the right recipient on the other end. You folded the paper, you put it in your pocket, you ate breakfast. Your wife asked if you were all right. You said you were fine. You asked about her sister's visit next weekend. You had another cup of coffee. The radio played something else. That's the moment. Not a confrontation, not a revelation in a lit room with the weight of justice visible in the air around it. A kitchen table, piece of paper, eggs going cold. The most ordinary Saturday morning the city had available for the worst thing you'd found in 9 years of accounting. The problem with finding the hole is that you can't fill it from inside the structure it's in. Going to Erie was the correct procedural move. Irie ran the investigation. Irie was the chain. Rule 4 said you trusted the chain above you, but Rule 4 was written for an intact chain. A chain with a hole in it doesn't transmit the information you put in at one end to the destination at the other end. It drops it somewhere in the middle, in a direction you can't see from your position in the structure. If you went to Erie and Irie was somehow also compromised, not in the same way, not by design, but by the ordinary institutional contamination of a building where a senior person has been moving information sideways, then the information you brought to Irie would move the same way everything else moved, away from the investigation and toward whoever was waiting for it. You couldn't go up, so you went sideways. His name was Kowalski. Frank Kowalski, a junior agent who'd been brought into the SIU 8 months into the investigation from a posting in the Milwaukee office, well after the contamination period you'd mapped. He was 27 years old and had 2 years of field experience, and he'd been assigned to the lower priority document review, the material that needed coverage but wasn't considered central to the case's development. He was functionally invisible to anyone mapping the investigation's power structure. You'd been watching him for 3 weeks before you decided. Not surveillance, observation, the way you watched everything as accumulated behavioral data that either cohered into a pattern or didn't. Kowalski was methodical in a way that was different from performance. He asked questions that were actually about the answers. He noticed discrepancies in his assigned material and flagged them accurately, without overstating their significance. He was, in the language of 9 years of working alongside people in difficult investigations, someone whose instincts were reliable because they weren't yet institutional. He hadn't been in the building long enough to be the building. You approached him on a Tuesday at end of shift when the office was clearing and the particular quality of almost empty allowed for a conversation that didn't need to be witnessed. You told him you had a document question. You asked if he had a few minutes. You spent 40 minutes with him in a conference room with the door closed and the blind drawn. You showed him the ledger copy, the one that had lived in your briefcase for 3 months. You walked him through the gap methodology. You showed him the restricted routing pattern and the timeline mapping and the name on the piece of paper that was still in your pocket from Saturday morning. You didn't tell him what to do with it. That was important. The information needed to be his to act on, not yours to direct. You'd understood this without articulating it until the moment you sat down across from him. That handing Kowalski the information was only useful if Kowalski understood it as his own discovery, his own case, his own decision about how to move it. If he was acting on your instructions, the contaminated chain could follow the instructions back to you. If he was acting on his own analysis, the chain had nowhere to follow. You gave him the documents. You gave him the methodology. You gave him the timeline. You told him you thought there was something in the restricted routing that warranted a fresh set of eyes. He looked at you for a moment. He understood exactly what you were doing and why. 27 years old and 2 years in the field, and he understood it completely because it's the kind of thing that's obvious once someone has shown you the shape of it and impossible to see until they do. He said he'd look at it. You said you appreciated it. You took your briefcase, lighter now, the ledger copy gone, and you went home. The indictment came in June of 1931, 22 counts of tax evasion. The methodology that anchored the case was the expenditure approach, refined and extended by additional documentation that had emerged in the months after you handed Kowalski the materials. Your name appeared in the case file in 3 footnotes. The methodology memo was cited in one of them. The attribution language was careful and administrative and carried no weight in any public account of how the case was made. Kowalski's name appeared in the primary case documentation, as it should have. The liaison officer left the Chicago field office in December of 1930 on what was described in administrative records as a voluntary transfer to a posting in the southeastern region. The transfer was not publicly connected to anything. It didn't need to be. The case was intact. The gap in the ledger remained in evidence. The chain had been repaired, quietly, from the inside, by someone who was no longer in Chicago and who hadn't been publicly identified as the reason for his own departure. You watched this from your desk and you understood the machinery of it. Institutions don't expose their own failures publicly when they can correct them quietly. The correction was real. The failure was real. The public record of neither was available to anyone who hadn't been inside the specific sequence that produced both. You'd been inside that sequence. You were on the outside of the record that described it. The briefcase went back to carrying normal work documents after June. The same briefcase, the same wear, at the left handle where you'd been carrying it for 6 years, the small brass clasp that stuck on humid days. You'd bought it in 1924 and had it resold twice and intended to keep it until it stopped being useful. Objects that serve their function don't require replacement just because of what they've been used for. That was the logic. It wasn't quite the whole truth. The truth was that the briefcase had carried the ledger copy for 3 months, and you knew what that meant, and you decided it meant nothing that required acting on. The briefcase was the briefcase. You carried it home every night. Most nights now, it was empty of anything significant. Most nights. Capone was convicted in October of 1931. 11 years on, the 5 counts that held through appeal. The newspaper accounts ran for days, and the prosecutors gave interviews describing the methodology and the patience of the federal effort that had finally brought the city's most notorious criminal to account. You read the coverage at your kitchen table, the same table where you'd written 3 names on a piece of paper and crossed out 2 of them on a Saturday morning with eggs going cold beside you. The radio was on. Your wife was reading something else at the other end of the table. The ordinary Saturday morning texture of a life that had continued through all of it, unchanged externally, carrying the internal account the way it carried everything, without the weight showing. Your name wasn't in the coverage. This was accurate. You hadn't been the one who stood in the courtroom. You hadn't been the one who delivered the indictment or the evidence or the argument that the jury had found sufficient. You'd found the gap. You'd understood what the gap meant. You'd handed it to someone who could move it through a structure you'd mapped as compromised, and he'd moved it, and the structure had held long enough for the case to close. That was what you'd done. The record showed 3 footnotes. The coverage showed none. The outcome was what it was. You folded the newspaper. You refilled your coffee. You asked your wife about her sister's visit. 22 years later, in 1953, you received a letter at your home address on the Northwest Side. The return address was the Chicago IRS field office. The name below it was Frank Kowalski, who was by then the field director for the Chicago district, a career that had proceeded from that Tuesday conversation in a conference room with the blind drawn through a sequence of cases and postings and promotions that constituted, by any external measure, a distinguished record of federal service. The letter was 2 pages. The first page discussed your retirement, which had occurred the previous year. It discussed the accounting profession and what Kowalski characterized as its underappreciated centrality to the functioning of legitimate institutions. It discussed Chicago in the general terms of a man who had spent his career in the city and had developed specific affections for its specific character. The second page was different. He said he wanted you to know that he understood what you'd handed him in that conference room. Not just the documents, atas, the structure of the problem, the reason the documents had to come to him specifically rather than through the chain, the specific calculation you'd made about where the chain was intact and where it wasn't. He said he'd understood it at the time, but hadn't had language for it that felt adequate. He said he'd spent 22 years finding more adequate language and wasn't sure he'd fully succeeded. He said your name should have been in more than 3 footnotes. He said the case was built on the methodology you'd developed and the specific move you'd made when you understood the chain was compromised, and that both of those things deserved a record that they didn't have. He said he was sorry he couldn't give them that public record. He said the institutional reasons for the gap in the public record were the same institutional reasons that had required the gap in the investigation to be handled the way it was, quietly, from the inside, without exposing the mechanism that had created it. He said he'd spent 22 years understanding that this was not satisfying, but was probably correct. He said the letter was the only record he could give you. You read the letter twice at the kitchen table. The same table. The radio was off that morning. Your wife was still asleep. The morning light came through the window at the angle it came through every morning at that hour, the ordinary light of a day that didn't know what was happening at the table in front of it, and wouldn't have registered it differently if it did. You put the letter in the drawer where you kept things you intended to think about more carefully. The drawer had other things in it. Your service record, a letter from your mother from 1942, the deed to the house, documents that carried more weight than their physical form suggested. The letter sat there for 11 years. You took it out occasionally, read it again, put it back. You never wrote back. Not because you had nothing to say, because the letter had been his way of closing a 22-year account, and writing back would mean reopening it, and what it needed was not to be reopened. What it needed was to be received. You'd received it. That was the transaction. That was what the letter was for. The ledger page is gone now. The original is in a federal archive somewhere in the institutional record of the Capone prosecution. The copy you made in March of 1930 and carried home in your briefcase for 3 months and handed to a 27-year-old agent on a Tuesday evening with the office clearing around you. You burned that one yourself, 3 days after the indictment came down. Standard procedure for working copies after a case closes. You stood over the metal waste can in your office and you watched it go. What doesn't go is the gap itself, not the 4 days in the ledger, the shape of the thing the gap revealed, the specific form of a problem that required the ordinary procedural tools to be set aside and a different approach assembled from what was available. A junior agent, a conference room, 40 minutes, the deliberate transfer of information to someone positioned outside the contamination. The mechanism. You'd built it from accounting principles, actually. You just applied them to a different kind of ledger. Identify the gap. Understand what the gap implies. Find the reconciliation that accounts for the discrepancy without introducing new discrepancies. Get the books to balance through the cleanest available path, not the obvious one. 9 years of examining other people's numbers, and the fundamental lesson was always the same. The gap is never where the problem is. The gap is where the problem becomes visible. The problem was there before the gap, accumulating in the columns where nobody was looking, in the transactions that didn't produce records, in the space between what the books showed and what actually moved through the operation. You found the gap. You understood what it implied. You got the books to balance. 3 footnotes, a letter 22 years later, a kitchen table that was there for all of it. ordinary and unchanged, not knowing it was carrying any of this and not needing to know. Some ledgers balance without the balance being visible in the record. That's the ones that needed the most work.